Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you some money. My job is not just to educate and teach, but to put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. On a brutal day like this one, where the Dow tumbled 370 points, S&P plunged 1.64%, and the Nasdaq plummeted 1.82%. Sell. One of the worst days for the bulls. You know what we got to do? We have to get into the minds of the sellers so we can figure out who's making this market come down. You want to know if they know something, what they know, how to profit from it even. I mean, the sellers have to know more than we do, right? Actually, no. The truth is there are a million reasons why people might sell, so you have to stop questioning your judgment for sticking with the stocks that you believe in. Not everything is worth throwing away. For example, why did I often sell in the month of September at my old hedge fund that I ran for 14 years? Well, lots of times it was because we were just up so much that only an idiot would keep owning stocks into the fourth quarter. You only need to make your year once. I remember there was one year where we were up big. I mean, so big that we dumped everything right about now. Everything. And all I did every day was go watch the movie The Fugitive with Harrison Ford. Terrific film. Although not as good when you already knew who hired the one-armed man. But I kept going to the theater, though, because I wanted to make sure that I didn't put any money to work. The movie was so compelling that I could watch it endlessly. So did I sell stocks that September because of the fundamentals? No! I sold it because of The Fugitive. I didn't kill my wife. My investors didn't care. Okay, maybe that's an extreme example of a hedge fund that sold $500 million worth of stocks where the selling meant nothing at all. We were simply up big for the year, and we didn't want to give the risk giving the money back. But in the interest of trying to get to the bottom of this particular abyss, let's go into the cranium of a typical seller on a day like today, and not with an ice axe Trotsky style. First reason to sell: interest rates. Good reason. If you believe inflation is coming down fast enough, then you might think a 20-year Treasury bond yielding nearly 4.8% is a decent rate of return to lock in. Good enough to sell stocks and swap into the bond market. Now, it's been 16 years since the long rates were this high. That might actually be tempting to a lot of people. Me, as rates go higher, guess what I think? I think they slow inflation. Therefore, stocks that have sold off because of inflation might be big beneficiaries of this moment. I suspect you'll get a better return from many of the stocks that you might have sold than you will get from the long-term treasuries right now, because it's certainly reasonable that someone might want to sell a stock to get that risk-free return, and that's the only reason. Doesn't mean your stocks are wrong, though. It just means they finally have some serious competition. Again, acceptable, rational reason to sell, just one I don't agree with. Second reason to sell: macroeconomic weakness. You hear that term a lot. This morning, Cisco announced that it's buying Splunk, a data analytics software company, for $28 billion. Both Chuck Robbins, CEO of Cisco, Gary Steele, who runs Splunk, talked about macro headwinds when they joined us in the set of Squawk on the Street. These headwinds certainly elongated the deal process for Splunk, delayed but didn't stop big signings. Yes, there's a lot more risk in this environment, but that doesn't mean there won't be any deals at all. Stocks will come down to compensate for this weakness, and once it's priced in, we're back to normal. Difficult adjustment, though. Third reason to sell: you're scared, okay? I mean, you're just scared. You're up big, or maybe you just don't want to lose a lot of money. You lock in what you have, like I did with The Fugitive every day. This kind of selling makes a ton of sense for money managers who will grade it on an annual basis, but it doesn't make sense for you, regular investors, because it presumes that you can get out and then get back in at a better level when things are, safer. Hardly anyone's that nimble to pull that off. In the end, selling when you're scared and buying when you're no longer scared translates into selling low and buying high. The bargains come when you're frightened, not when you're feeling good. Fourth reason, the Fed. Now, I often hear people are selling because of the Fed. I know it's not like the Fed's sounding at all clear when it's at the bottom or the top. I mean, Jay Powell did say that there might need to be a slowdown, which implies some serious layoffs if inflation doesn't simmer down. He repeatedly mentioned that we have to get to that 2% inflation level, and we're almost twice that. But is that really a good reason for you to sell at this point? In fighting inflation, the Fed's preserving the value of long-dated assets like stocks. Now, if you want to sell Amazon down more than 15 points from its high because of amorphous fears about the Fed, I get that. You fear the risk. But I recommend taking Jay Powell at his word and accepting that things will be rocky for a while before they once get better. I don't really see any other way to look at it. We don't have some crazy person running the Fed. We got a rational person who wants to bring inflation down as part of his mandate as the Fed chief, and he accepts that there could be some collateral damage like job losses. So own stocks that do well in inflation if you have to, like the oils. We bought one today for the Travel Trust literally during our monthly meeting. And when the Fed wins the fight, lighten up a little on some of these commodity stocks. That's when they start losing value. Fifth reason to sell: the political climate. Now, I recognize that the two parties have an insanely toxic relationship. It's even become toxic in the Republican ranks in the House of Representatives. I could make a big deal about a potential government shutdown. It's just that it won't impact the vast majority of your stocks. American politics are exhausting and discouraging and downright miserable. But I think that's already baked into the market. Sixth reason: the strikes. Now, we've been blessed with peaceful labor relations for so long, we can't even believe what's happening in Detroit, right? I mean, you're worried about the ripple effect. But you know that only 11% of the workers in this country are now unionized? That's much more in the old days. There won't be a ripple effect. Now, you might ask why the auto companies are letting UAW leader Shawn Fain boss them around like their children. Me? I think, for instance, that the one that Travel Trust owns, Ford, should break ranks and tell the union that, unlike GM and Stellantis, it's been hiring additional employees in this country, union employees, while GM and Stellantis have been reducing them. Ford also has almost no temporary workers. The others run with 10% plus temporary workers. Ford needs to stop the talks, walk away, and say to Fain that unless the union is willing to make a separate peace with Ford, it's going to lock everybody out for 5 months, which is much longer than the UAW strike fund can handle. Fain got in at a close vote with no mandate because there had been so much corruption at the top. That's why he was elected. But enough is enough. He's in charge of the UAW, not Ford. If you're selling because you see a wave of unionization, I think you haven't done your homework. Now, I think these are let's call them the big six. Now, some of them make sense. Others don't. But what you have to realize is that every time the stock market goes down, these reasons to sell all become less relevant. That's what lower prices do. They take points like these into account because now the stocks are cheaper. Bottom line. The Fed can't upend the rally because there isn't a rally. Higher rates won't send stocks lower because they're already down. And that's how you have to think about things like the stock market. Otherwise, you know what? There really isn't a level where it feels safe to own stocks other than at the top when nobody's worried about anything. That's not investing, though. That's called stupidity. Let's go to Bob in Florida, please. Bob.
Jimmy Chill, how you doing today?
Jimmy Chill's doing fine. What's happening?
Good, not much. Hey, I just had a question on this stock. With it being like the #1 athletic kind of brand that people wear, the chart looks good. What do you think about Lululemon right here?
Okay, so here's the way you look at Lululemon. This is the kind, people, when Lululemon reported, all right, everyone just said, oh, it's too high, it's too high, it's too high. I don't want to buy it. It's great. So now it's coming down. What do people say? Whoa, it's really scary. Hey, it can't be both. You put a little Lulu on at 380, and then you put a little on at 370. You want to buy 100 shares? You leave room so if it gets to 340, you buy your last 25. That's how you have to think about it. Let's go to Trey in Texas. Trey.
Jim, my wife returned from the store today with a crop top rain jacket. Given their ability to sell 50% of a product at 200% of the price, is Target a screaming buy?
Okay, so I happen to like Brian Cornell. I happen to like it to shop at Target. Here, Target yields 3.75%. Holy cow. 15 times earnings. You know what? I am not going to fight someone who wants to buy a little Target here. I mean, it's just I like Walmart, I like Costco, I like Amazon. But I will not fight anybody. 3.75% and 15 times earnings. That is not a fight I want to take on. I'm going to go to Alan in Tennessee. Alan.
Booyah, Jim. What
Booyah.
do you think of Danaher as a healthcare growth stock?
Okay, now, this market does not like high multiple stocks. What they don't realize is that Danaher is a big beneficiary of the fact the IPO market's going to open again because of biotech, and it's a huge beneficiary of the fact that it's selling a company that is not, well, it's a good company, but buying a better company and make it so that people end up paying more for the stock. Danaher is one of the great growth stocks of all time, and you're getting it at a discount. All right, now listen to me. The lower this market goes, the less relevant the scary reasons to sell become. And that's how you have to think about a stock market. And you have to be ready to buy at lower prices that it gives you. On Mad Money tonight, nuclear power player Constellation Energy's had a big run so far this year, but could the recent surge in oil prices send this stock even higher? I'm checking in with the company's top brass. And the convenience store cohort, boy, is it taking a beating. But could there be a diamond in the rough among the group? I'm going to reveal the name that has bucked the trend in retail and is still overlooked by Wall Street. And the September gloom is still present in the market today, like big time, right? But could a buying opportunity be around the corner? Probably not. Hold it just a second. Why don't we check in with Cramer fave Larry Wood to see if it's still negative? Because he's been right. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.